Hey everyone, DayTrader Rockstar, and tonight I bring you a very special educational video. This is just a basic outline of a few rules that you need to do while you're trading, just to kind of even the odds in the market. I've been waiting to do this video for 2 days now. We had a big snowstorm here in New York, and I was like so excited. I wish I had power yesterday because I had so much and I had to take all these notes and stuff. Then I wanted to come back and bring you some different setups and kind of explain what I always preach every day on the radio. And a couple different things. First of all, let me start by saying that yes, for those out there who are not familiar, we have I do this each and every day live on the internet at DayTradingRadio.com. and where you have that screen, basically what you're seeing right now, and we trade these positions. We show you how to find out how to read the chart patterns and how to trade off of them, and we do it live. And there's a great community of traders that work with us, and we continue to master the trade, so to speak. So this video is just a continuation of the journey, and that's what this is. It's a journey, when you trade for so long, you start to see things in the market. And I'm just going to kind of ramble on here. I'm doing this with you live from the office, but there's so much always in my mind when it comes to trading because I've traded for so long. And when you go back and you learn how to not to do things correctly, and then you learn what's easier, trying to figure out what to do correctly, or understanding not to do those wrong things again. And there's more the things that you don't do wrong, then you're gonna narrow yourself to the correct things that you're gonna be doing in the market. So I've been really stressing the importance of recognizing the patterns in the market, the channels, the different patterns, the wedge patterns, the W patterns, but most of all the channels, and how to use the daily, the stochastics, and the 60-minute stochastics to really outline your trades. And if you could just stick to this concept, there is not much more that you need to do. You don't have to try to make it too complicated. That's where I think a lot of traders are going wrong, is because they make things so complicated. And again, I could go into a whole rant here of how many different people out there try to show something that's not visibly on the chart. When you look at a chart like you're looking at this one right here, maybe you didn't have the lines, you didn't recognize how to build the lines, and that would be harder. If you were just have to trade the market like this and try to gauge it with no lines on it, with no indicators or nothing, that might be a little difficult because you have nothing really to refer it to, anything and to compare it to, and you'd be at a disadvantage. And the reason we bring indicators into our trade is because it gives us a clear view of what the computers are doing. And if you look at something that's logical and scientific, then you have to, then you're there with, you're kind of on the same level as, these so-called black boxes, because they are calculating these setups also. And when you do look at a potential pattern and you just build it out and you say, wow, this is amazing, this is actually, let me actually go here. There's so many different rules, and you got to remember, we're going to go over some of the rules tonight too. But here's a beautiful example of a channel. Whenever you have a gap in a pattern, a gap, that also represents a new channel or a new pattern altogether. So whenever you have a gap, never try to add that upper portion or the bottom portion of the gap. It always kind of represents a new pattern that developed from that level. So again, you have the 1, 2, 3 method for the stochastics pulling back 5. You see the oversold stochastics here on the daily, giving us that really great indication of a momentum shift. We're still inside the pattern. We know from experience that a pattern this type of pattern breaks to the upside. So when we do have a divergence, or we have a setup where we're no longer making maybe lower highs or lower lows, in this case we are, but we're also getting the divergence on the stochastics, which gives us a better shot of pushing up. And then just this week, the reason I'm showing this one right now is because we've traded this one. This is one that I sent out as a Monday morning alert. This one in Siena, and it was based basically on the 60-minute charts, which we break down, because these will give you good monthly charts, but you can see how, how important that 60-minute stochastic chart came into view. Each level gave us a little bounce, and it kind of pretty much showed us that this was holding a great strength here, and then, this was actually the last key, and it was a nice break out of this. But you could go back here and you could see how the market started to trend. So you can identify that trend, then you can really start to use the stochastics to your advantage. And again, I'm going to just pound this in your head all night long, the importance of paying attention to the scientific approach of charting. It's not about, the mystical things. You'll see a level show up twice, and you can extend that line. There's a better probability of the price bouncing off of this line than any other time. And when that stochastic comes into play also on the 60-minute chart, that's a pitch over the plate that I want to swing at. All right, because that's what I'm there for. I'm there to trade. So I don't want to think about the trade here. I just want to take the trade. I don't want to think about it. Again, this was something I sent out on the watch list. So this was a great setup. We took this trade, and it performed great. It took off. This was even a good, that third test of an underlying trend line. And now this one goes out. We could just actually hold on to this chart and keep it on our focus list and our watch list, and just refer back to it each week until we see that there's a new pattern starting up, because it's very easy to read on the 60-minute chart. All right, the CCJ. All right, now the CCJ, you could also see this was also I think this was the kick-ass trade a couple of weeks ago or last week, but you can see how easy it was to read this chart. We started out on the daily chart, the daily stochastics, and the daily channel here. And here's a great example of a trend line up here. I'm using that 1 through 3 method. We have an extension here, and at this point we only started really noticing it at this point. So at this point I put this underlying trend line in here, and I put a parallel trend line here, represented it. It just happened to come to the gap area here, believe it or not. That's it just happened to be a perfect level if you draw that parallel line. Remember, you already got this line in. It's hit it here, hit it here, hit it here, hit it here, and you just draw this parallel line and you extend that out. And at this point during this trade, when we first announced this, the oversold stochastics, the underlying trend line, that's your combination that you want, and you have to take that trade. And at this point you're looking at a wedge pattern inside of a pattern, so that's also a very bullish pattern to the upside. But remember, that wedge, always the first target of a wedge is if you extend that wedge out and make it a channel. So take that point, make that parallel line, and that's exactly where this trade came up to on CCJ. So it came to the top part of that channel, and at this point we're going to be watching it on the 60-minute chart. And the 60-minute chart, you just break the 60-minute chart down, and it's right there for you. So as you got the breakout, you have the lower trend line, or actually the lowest point of that lower trend starts at point 1. Here's point 2. Here's point 3. It actually comes back and kind of hits it again. You move up here, oversold stochastics. These pretty much all line up together, and the trend continues. So again, you want to watch this. I have a feeling this one's on the. Let me double check this right here for you, because the watch list is out. Yes, and this one is on the watch list for this week as a watch. And again, I do expect it to move higher off of here. Normally, I would say the risk-reward trade would be down in this 21.30 to 50 area. If we got a pullback down there, a dollar pullback would be right on top of it. And again, waiting for those stochastics to pull over into an oversold level. But because hasn't broken out of the channel yet, there's a nice gap above us. Stochastics are crossing back to the upside. I expect a breakout of this channel early this week. So CCJ, great setup. Now, we haven't talked about this one. Actually, I wanted to bring this out. I send this video both out to the members of the site, and I post it on YouTube, because I think the information that goes out here is so important. I know, go over it over and over again, but I would like to show you just break it down a little bit further for you. PCX, a coal stock we've traded many times, is because we've recognized the 1, 2, 3 pattern. We see that this level oversold. Again, this is a rule. This is my rule called the DTR rule. You apply the 1, 2, 3 method, and you trade 4 and 5. I typically just trade the lower trend lines. If you notice me on the radio, when I usually take a trade, it's usually on the lower trend line. I like to buy into weakness on that bounce. But the opposite could be done. If you're a short seller, this technique works really well. Just about short into strength on the opposite signal. So it works both ways. It depends on how you feel. Whatever mood you're in at that time. But again, 1, 2, 3, 4, 5. I always try to trade 5 and 6. 4 and 6, 5 sometimes. But I just let the rule is only trade these when you get a confirmation on the stochastics. All right, and the confirmation would be an oversold stochastics, or basically stochastic indicator under 20. All right, so I would not, if this was 40 or something and we were down here, that would be your way out. I mean, even though you still have a higher risk reward type of trade here, this is a golden, this oversold stochastic and a lower trend line. All right, same thing here. Once you were able to get that gap, you start a new channel, 1, 2, 3. If you actually go down over here, you can actually see number 4, lower trend line, oversold stochastics, and then boom, you can see that nice move up out of this. So that's what this represents. 1, 2, 3 pattern, trade 4 oversold stochastics, move. I do that all the time, and you can see this is on a daily chart, so it doesn't happen every day. But you take that same chart, break it down on a 60-minute chart, and you could, you look back, you learn to, you learn to read a chart. You see certain areas of the chart, the embedded stochastics, meaning weakness. The what I call it. Oops, there we go. We lost it. Some of the ways that we get to cross over, very strong crossovers and trends. The important part is that underlying trend line that supports the stochastics. You want to have that pattern. You want to have that wedge. You want to have that channel. Most likely, if it's for me, I always want to have these scenarios. Why would I, go outside my comfort zone? Why would I try to guess what the market's doing? Why would I, just say, ooh, I think that one's going up, with no technical reasoning behind it, other than guessing or wanting to be. That's what a trader does when he gets bored, or when he might be a beginner and kind of just learning the ropes and getting over anxious and over trading. It's all has to do with over trading. Having too much time sitting at the desk and having money at your disposal and trying to make something happen. The market will always give you opportunities as long as you're patient enough. And until you figure that out, until you realize that, until you're able to practice that, you will, you'll take 2 steps up, 3 steps forward, 2 steps back. Sometimes you'll take 3 steps forward, 1 step back. You want to get to that 3 step forward, 3 step forward kind of thing. 3 step forward, I want to get to 4, 5, 6, 7 steps forward, maybe 1, 2 steps back. We all have those steps back. We all are human. That's why they have computers trading these markets. It's humans against the machines. Remember that, people. And we want to train ourselves to be machines. All right, and we could do that by using the same things that the machines do, but doing it kind of a manual way. The books are not really going to teach you too much, other than showing you great examples of some great charts. And it's similar to an analogy. I love the analogies in the stock market. Something that appears. All right, say you're a tracker. Like when I was 19, they called me down to Brazil to try to track a lost 14-year-old kid with the couple was on vacation and stuff. And I knew as a tracker, now I'm actually pulling your leg here, but we'll use tracking as an analogy. You could look in a book and learn how to read. You read different animal tracks, and I like to do this. This is something I really have to do. When I was a kid, it was winter time. I go out in the snow and track these animals. See what kind of track that was. But then you got more advanced. You learn how to track in dirt and stuff. So you're looking at the book and it's like, wow, this is a bobcat, or this is a coyote, And this is, and they give you a nice sketch of the coyote print and stuff, and you're looking, and it's all of a sudden you're out in the wild, and you get this footprint in the mud which is smushed over, and it's not exactly, but by the impressions and by certain things of the track, you can pretty much identify it. So you're not looking for that picture perfect trade. You're using this market as, it's leaving us trails and tracks, and if you can identify that before someone else does, you could actually trade off of that. And I hope that analogy worked for you there. All right, PCX. Again, we just went over that, the 1, 2, 3 method, and only using that with the 60-minute rollover on the 60-minute chart. If you could do that, you'd be great. Working on a site, to complement the member site, that are just going to bring the 1, 2, 3 patterns to you. Kind of separate them because they're so good, and also the high probability setups. We had something in the work on that. We put it on the side, or the back burner for a while. But because this is so important, and this is such a good way of trading the market and making this, making a career or making a life of doing this. It's development of your, the human traits that we have. That's going to be the hard part. The research, I could do, I do the research. We bring you great setups all the time. It's just managing, some other issues. All right, so just go a couple more stocks just to kind of nail it home, right? It's a big Goldman Sachs, great company. Oh, not a great company. I should take that back. Great company to trade because it's a highly followed company. Hedge funds, everyone, institutions. Traders alike, they love to trade Goldman Sachs. I mean, it's a big financial company, and it's been hammered. But when a stock goes down, it goes down just like any other stock, usually in a method, and you can actually start to read the signals. These are the signs. These are the tracks that the stock is leaving, saying, all right, I'm just going nice orderly decline. If you know where my path is leading, maybe you could sit in ambush here, oversold stochastics, lower trend line. Big reversal candlestick. All these three combination here is a high probability setup. 3 combination, 3 out of 5, 4 out of 5, or 5 out of 5. So if you have 3 out of 5 indicators lining up, and the reversal candlestick here is a nice one on volume, that told you that was a nice buy area. It's usually, this method usually outlines the best areas to buy. It's just, again, being on top of it at the time it's happening, seeing the signals, half the battle. All right, that's why you have to have a focused list that you go through each week, and that focused list could be, it could be as many stocks as you want. I prefer, I told you, in this week I scanned visually scanned about 400 stocks, and then I broke those down to about 30, and then I send out the 10 for 1,000 watch list, which is the best of the best of the setups. And we got actually 3 kick-ass trades on this week's list, and a kick-ass trade means trades that I'm definitely going to get into, and my favorites for the week because of the indicators, because of the setups and things that that they probably have the best setups there personally. All right, so let's take a look at Goldman Sachs. Another great stock that you can pick up there, and then you break it down to the 60-minute chart, and you find out there's a lot better opportunities on this every couple of days. So when you see this becomes it comes an ATM machine for you. You wait for it to come to a trend line. You wait for the oversold stochastics. You take it, you trade it, you move on. All right. This is great for scalpers too. Because you want to scalp a stock in the direction of your scalp. It would be great to know that stock's going in that direction for the day too. It's not the intraday not knowing what you're doing when you get into the market and say, I'm just going to scalp it as I see it. Now, you want to be able to say, all right, today's a great day to scalp Goldman Sachs. Stochastics are oversold. It's on the lower trend line. It's probably going to bounce nicely. I'll just catch that momentum. I'll have a better risk reward to the upside here. Or the opposite. We're pushing up against a trend line, overbought stochastics. I want to scalp it to the downside today. So it's important to always, when you do your research, you go look at the 60-minute chart. Very important. All right, WFC. This is another financial, and we're actually going to talk about this tomorrow. I didn't put it on the watch list, so I'm sending it out to you guys today. I would put it on the watch list for this week, and just basically take the trade if it came down to the trend line. I mean, this is a very strong stock. It's It's a good tradable stock off of technicals. I think this is easy cash. Easy cash if we get down here to 26.20, wherever that level lines up. I'll be on it this week, all week. So we'll be watching this one daily. This is exciting to see this Wells Fargo. And Wells Fargo not recently coming out of its base. So it's a pretty decent base it's coming out of. And it's just slowly moving. So look at the stochastics, very choppy here. Ooh, very tightly wound up. So we could actually get this breakout tomorrow. And if we got the pullback, again, we're just looking for that lower trend line of that 60-minute chart, which basically probably comes under like this. And this is going to start to develop something out. So love to get the pullback on Wells Fargo. Again, on a 60-minute chart. But again, you see the technique here. Now, I could go through a bunch of stocks. I mean, I could continue to go through them. Did I do Halliburton yet? HAL? I mean, we could go through these stocks over and over and over again. Halliburton, same thing. Recognize the channel before it happens. Take the trade when it comes down to it. All right, Halliburton, just to do that. Dr. Reddy, we were on that one a couple weeks ago. Called it a kick-ass trade. We were all over it. You know why we were all over it? Because we know what to look for. All right, you know what to look for before it happened. We saw we saw this trend line. We saw the coiled stochastics on the daily chart. I mean, it could have been a better. You see it's very choppy here, but that's when you go to the 60-minute chart. And when you take the 60-minute chart and you take it out, then you really start to see the patterns. And RDY, Dr. Reddy, because it's a quality company, and I've traded it before. I knew I was getting into something on a pullback that was going to move up. Just because, again, it takes a little experience, but you get a feel for patterns, the pattern reversals. Want to be in the right type of stock. You don't want to just be in a stock that's not, doesn't, there's no interest in it. But anyway, this one apparently looked to be a wedge pattern. But as we know, wedge patterns, downward wedges break up, and that first target would be if you extended this trend line to make it a parallel trend line. See how I'm doing here? So I'm taking the wedge, but because it's a wedge, these two are not equal distance. They're slowly getting tighter and tighter when they come to a point. But something about that wedge didn't make sense. It didn't look like a classic wedge. So something like that, you usually take a trend line and you push it to, you just try to make a parallel trend line, equal distance from here to here. And now it's an equal distance, and it actually shows you that this was a channel. So the channel came into play. And then at this point, I think we took this trade probably right off the lower trend line. That was a 60-minute chart. But, it was really the first retracement off the low. Oversold stochastics. It's a technique. It's usually called once you have a trend line break or a channel break, whichever it was. Well, actually, this was the first retracement. This is a large channel. Might even bad here. And this is the divergence. You got a pullback, but you're holding off for recent lows. We're here a series of lows and lows and lows, lower lows, as they came down. And now we had the change of trend. So this is the change of trend. We got the first pullback. Now we move up, and now you would trade the same way. You would wait for that trend line to come back down. The next setup on Dr. Reddy, RDY. All right. One more, and then we're going to call it a day. Vulcan Materials, VMC. You can see that was a beautiful, beautiful channel. Even a stock that I didn't even really feel comfortable in, because it's just, it's just a poorly performing stock. But you can actually see that, hey, you can't deny the recognizable pattern. I made a point of recognizing both of these levels. And then once we got up here and we started consolidating around, beginning of October, we go to that 60-minute chart and we start to see, the setups. So you start to see the stochastics rotating here, getting oversold, and then you get that nice pop over here. The same thing. You get the slight little pullback, and here's the oversold stochastic. A couple different levels. Not on a very bullish stock, but a great one to continue to follow. So we know what the main reason we're talking tonight is really to understand how important it is to stick to this rule. All right, this is one of the main rules that you should be using. again on the daily or on the 60-minute chart. Identify the 1, 2, 3 pattern. Trade for when the stochastics become oversold, and we're just use that as a standard. Like do the opposite if you want to take the short. So I'm just going to be mentioning longs here, but just to make it easier. So recognizable pattern, lower trend line, oversold stochastics. Boom, take the trade. Break it down to the 60. Start experimenting it with it on the 5-minute and the 15-minute. I don't use the 15-minute, but I do use the 5 and the 60. And we'll finish off by saying one thing about the overall markets. A little market update. Here's the S&P cash. We have an interesting thing. Everything, I follow all the news and stuff, and you're hearing that. I think everyone and their grandmother thinks this market moved too fast, too far, too fast. Well, of course, it's always easier to call. It's like as the market extends, it's easier and easier to try to call for a retracement and look right. Not to say it's going to be right. Now, let's remember that this market is a vehicle for people to make money in. So it's and there's bigger people in control of this thing. If you would considering the worst, how bad the world is off and financially, and the markets are not that far off the recent highs. We've looked back at 2010. We had a nice little pullback, and you can see. At that point, we started getting a pretty decent pullback. We started pulling back. I don't have the measurements, but we've eventually popped back up and just ran through that. This is starting to look very similar to that. We got that breakout, and there's nothing that says we can't just continue to rally. Of course, we're going to have our days that we have some pullbacks and stuff, but this is still there's two sides of the coin here. You're either bullish or bearish. I would say with all the bad news that's out there and the way they're propping this market up, do I think there's more bad news on the way? Yes. So you can't help but think about it. If I was a computer or a black box, I wouldn't be thinking about it. I'd just be trading it. That's what we have to conquer going forward. Right now we have a nice little what we call a jack-in-the-box formation. It's an old Jeff Cooper, Kevin Haggerty hit and run setup. We're a large expansion day. Expansion day takes out the previous 60 days highs, and then the next day is an inside day, trading at the top portion of the channel. Inside day trading underneath the previous day's high and above the previous day's low. And this, you buy in the breakout of the this day, and there's a good shot that we could get a follow through here. And I'm kind of pointing on my bias is bullish, continue to be bullish, but also understand, hey, news is going to be out there. We're going to have to really pick up on the news the next couple of weeks and see what really comes back into the forefront and which way that market, what way the market's going to drive into that. Until then, daily you're not getting any signal from that overbought stochastics. You have the setup for a pop. 60-minute chart is very organized, and the trend has begun. So kind of broke out of the top part of this channel, which kind of throws things out of whack a bit. So we have to let things come back and pretty much set up. I want to really, this is going to be embedded. Maybe we get a further push up tomorrow, and we continue to flatten out up here, but at one point we're going to get a little pullback, and from that point on we have to really build this out. Right now, still the bias is to the upside, and that's it. So I hope you guys enjoyed this video. I think it's an important video, and it's getting late here, so I'm going to go get back on the charts. Overnight futures are trading right now. It's about 9 o'clock. I hope you guys get this in time that you could go through it. I know it's a little late. 30-minute video. I'll talk to everyone tomorrow morning on the radio. I'll be in about 8:30. DayTraderRadio.com. Good night.